We are back with two interesting webinars this weekend. The first is for NRIs looking to take advantage of the strong growth and opportunity that India offers to the world. Usually, NRIs have really complicated portfolios and investment strategies. But do you even need such complicated portfolios to build wealth? The answer is no. You only need a one stop solution called NEO to help you build your wealth in India. NEO is a simple and effective multi asset investment strategy that can take advantage of various opportunities in India. The second is exploring aggressive investment ideas. So, what is a high risk and a high growth investment strategy? Do you even need a high risk approach to build wealth? What is the difference between an aggressive investment strategy and a conservative one? The most important of all, when should an investor be aggressive and conservative? To know more and register for these webinars, click on the description below.
To wait or not to wait? The dilemma in the minds of most investors is simple. They thought that if you have a coalition government, the markets would fall. The markets did fall very briefly. Subsequently, we have seen a rally where the markets have gone to a place higher than what we saw earlier when we anticipated a single party rule. Effectively, the markets have shown more relief than they showed confidence before the verdict. The relief rally is stronger than the confidence rally or the expectation rally. But this is not new. Markets have always been like this, and we have to keep calibrating. Now, what is the dilemma before us? We are now heading into the pre-budget rally. After a strong relief rally, the market still thinks that there could be a pre-budget rally. But if you look at the valuations, you don't get that sense of comfort that there could be a strong rally from here to a higher place, to a much higher plane. But markets never listen to that kind of logic. They have a mind which is very, very unique. The market has a mind of its own. So it's not going to listen to all our rational arguments when it is in the middle of a strong rally. You cannot break a trend by the power of your protest. So either you participate in the trend or you stay out. So the problem in waiting is that you may well see a further rally in the markets which you have completely missed. So if you jump in now into whatever you want to buy where the trend is strong, you may make some money. But it may be a sensible choice to actually sit it out if you are not so convinced at the stock level. This is not a market to take a market level bet, an index level bet. It is a market to take a very, very company level stock specific bet. And that bet will be driven by the valuations of that company, its future potential, and whether the market is taking due cognizance of that or not, and whether there is a value proposition in that investment, or whether you are getting growth at a reasonable value. So it's a function of many things. If you're not getting that math right, you must wait. That is my sense. And by waiting, you must be ready to also miss out on the residual momentum in this rally. Not easy if you're the kind of person who compares your return every day with a benchmark, because if the benchmark does well, then you will underperform if you are not participating in the last leg of a rally. Expectations from the budget are very hazy. Nobody knows what to expect. But these expectations will get formed in the coming weeks, and you will also get cues based on which you firm up these expectations. As you firm up these expectations, you will see that the valuations are already captured in company prices, stock prices. And when you see the stock prices, you will again feel that maybe the market is more positive than it ought to be. Usually markets tend to become very positive before budgets and then moderate their position after the budget. If they have no expectation out of a budget and go into a pre-budget rally with pessimism, then the reverse can happen. The market can show relief after the budget and have a further relief rally. But this market seems to be more like the former, where markets are going to price in positive expectations from the budget. I don't think the market will turn bearish before the budget, or at least as we record this video, there's no sign or evidence of that. So effectively, we have a choice, and that is to sit out and observe this rally, or participate in companies which look attractive to us at the script level. That's the choice. And if we make that choice sensibly, then our investment journey from here to the budget would be something which we are comfortable with. It's an individual's choice. There is no one formula of what you should do between today and budget day. If I were to wait, I am foregoing the last leg of this rally and the pre-budget rally. If I don't wait, I am part of the volatility. That is the choice which an investor has to make. I would rather not bet on a big trend. I would rather focus at the company level and participate only where the company's valuations and relative attractiveness give me the confidence to do so. Otherwise, I would like to wait where valuations are elevated and take a call later once the sentiment driven move of the market has matured and the markets are willing to once again realign company valuation with company fundamentals. To wait or not to wait is a personal choice, but a choice you cannot avoid. Thank you for watching this video.